Hello. Uh, Hello, folks. Welcome to an experiment that we're doing here at Appcast to stream live on LinkedIn and take your questions about the October jobs report that was just released not even an hour ago this morning, November 5th. The Bureau of Labor Statistics released some really interesting numbers for October in the US. And I just want to make sure we're all set up and live here and that everything is working as planned. And I hope to take your questions and just, again, folks who are joining us on LinkedIn, this is a lab experiment. You're the guinea pigs. We're going to hopefully do this every month. So I will get right into the analysis of the October jobs report in just a second. But I hope to have your feedback on how this is going. Again, welcome, folks. If you're seeing me live stream this page, this video, this is an experiment that we're doing on LinkedIn Live, and I hope to get your feedback and your questions about the October jobs report in just a minute. We're going to make sure all these live streaming service, this tech is all set up. I'm in a soundproof phone booth here, so just waiting to make sure we get the go ahead. And I look forward to talking about the October jobs report. 531,000 net new jobs last month in October. Really strong report in terms of hiring demand. Wage growth was up modestly. We had broad-based employment gains in a number of industries. So it's looking good. It's looking really good in terms of hiring demand, in terms of workers. For employers, for recruiters, it's quite a challenging time though. It's going to be a while before recruiting challenges ease because labor supply hasn't fully bounced back, and we're going to get into that. The labor force isn't rebounding to its pre-pandemic levels. So just 1 second here before we get all situated, make sure that we got this stream set up. I'm just going to keep talking, which is something I can the labor force isn't do well. Oh, I see myself here. Making sure we got this LinkedIn preview fully set up. Making sure we got this LinkedIn preview fully set up. All right, folks, let's get started. I think we're all live. This is an experiment we're going to try here at Appcast. I just want to introduce myself and get started. My name is Andrew Flowers. I'm the labor economist here at Appcast. We're the global leader in recruitment advertising technology. And I am excited to talk about some jobs numbers for October. So this morning, not even an hour ago, this is Friday, November 5th. And just 50 minutes ago, the Bureau of Labor Statistics released the October employment report in the US. And so this is really a set of two surveys. It's really two data sets that go into this. One is a establishment survey of businesses. Essentially, thousands of businesses are surveyed about who they're hiring on their payrolls or what wages they're paying, and then they classify those businesses by different industries. And so we get a good understanding of the traditional payroll, labor side of the economy through that survey. But then there's a second survey of households, of individuals, of workers. And that's where we calculate statistics on the unemployment rate and on labor force participation and so forth. And so I want to kind of break down some insights that I'm looking at in this October jobs report, kind of give you all the lay of the land, but also to give some actionable insights beyond just where the economy is, give you some actionable insights on what the outlook is over the next, few months of the next few quarters. Not that I not that I have a crystal ball by any sense. I don't, but it's important to kind of take stock and then provide an outlook, because for a lot of recruitment marketing folks, for a lot of talent acquisition leaders, for frankly just HR leaders and CEOs of enterprises, we need to keep our pulse, keep the pulse on the labor market, have a good understanding of where the U.S. economy is headed. And so let's get started. So the October employment report showed 531,000 net new jobs were created in the U.S. in October, which is great. I mean, in any normal month, that would be gangbusters, enormous job growth. But of course, this is not a normal month. This is not a normal year we're living in. We are recovering from a pandemic, and we still have a hole that we're coming out of in terms of jobs. We're 4.2 million jobs short of where we were in February of 2020. We still have a ways to go. We're 8% short in terms of total payroll employment. So over 500,000 net new jobs is great. It's a great sign. And having the unemployment rate below 5%, it ticked down to 4.6% in October. That's a great sign, but we still have more ground to make up. And so the first takeaway I have on the October employment report is that there's strong demand on the part of employers to hire. We see not just the 531,000 net new jobs in October, but there were upward revisions to past months. So in September and in August, there was the rise of the Delta variant, right? There were rising caseloads of COVID in the US, and that slowed hiring, particularly in COVID-sensitive sectors. Well, guess what? It turns out in October, not only did that start to rebound as the Delta effect began to fade, but even in August and September, when it was not so good, it wasn't as bad as we thought, because the numbers in August and September got revised up by almost 250,000 jobs. So 235,000 jobs were added across those 2 months combined in August and September. So what previously looked like a really weak summer job growth is now seen as decent. Not great, but decent. So that's the first takeaway, is that October hiring demand and September and August hiring demand that was revised up is showing decent job growth. That's the first point. Second point, we see broad-based gains. I mean, I'm looking, let me look by industry here. Let's take a look. We see restaurants up 119,000 net new jobs in October. Manufacturing, 60,000. Warehouses, 54,000. Construction, 44,000. Retail, 35,000. So this is not just one industry. Yes, the leisure and hospitality sector, right? Restaurants and hotels and all those kind of COVID-sensitive, customer-facing jobs, they grew by over 160,000 in October. So that's the Delta effect fading. But it wasn't just leisure and hospitality that grew in October, right? Everything I just listed, construction, manufacturing, business services, there's broad-based hiring across the economy. This is a really strong sign. Businesses are investing, not just in capital and structures, but they're investing in people, they're hiring. So we kind of knew this, right? If you work in talent acquisition or recruiting, you know that there's a lot of competition for workers. We know it from government statistics that job openings this summer were at 11 million, which is by far the highest in the 20-year history of this data. So it's no surprise that hiring is strong, but there's a flip side to this, right? There's the supply of workers. And this is where the October employment report was less good. And I think for a lot of folks who are trying to navigate labor shortages in certain industries, we're paying close attention to the labor supply or the labor force. And so just because the unemployment rate is ticking down, that doesn't capture everything in terms of the availability of workers to hire, because to be counted as unemployed, you have to not just not have a job, you also have to be actively looking for a job. And so while the number of unemployed people ticked down to 7.4 million, there are a separate group of 6 million people who want a job, but are not actively looking for a job. So they're not counted as part of the labor force. They're not counted in that equation for the unemployment rate. And so for TA, recruiting, HR leaders who are looking, when are these labor shortages going to alleviate? The thing to look at is not just hiring demand, right? That's really robust, strong. That was the first few points I mentioned. And the October employment report looked really strong on those issues. The thing to look at is the labor force participation rate. And you know what? It was flat. It did not change. And that number of 6 million folks who want a job but are not actively looking, that didn't really change either. Now, one slight bright spot is the prime age employment to population ratio. So this is the folks who are between the ages of 25 and 54, right? Who are not in kind of prime education years or nearing retirement years. They're 25 to 54 years old. Just the share of them, it's really simple, just the share of them that have a job. Now, this did increase slightly in October from 78% to 78.3%. So that's like a slight, you have to kind of have to squint, but that's a slight rebound in labor supply among prime age workers. Again, they're a big part of the labor supply, the pool of hireable workers, but they're not all of them, right? You have younger folks, the older folks. And so that's where the whole labor force participation rate being flat comes back. That's the reality check. The reality check, the so what to this point is that for recruiters, for C-suite, enterprise leaders, you're looking at really strong competition for workers because hiring is booming. We're recovering from this Delta scare this summer, but the workers on the sidelines who either because of financial or health reasons who are just not yet ready to actively look for work, they're still on the sidelines. The October employment report, I was hoping, knock on wood, I was hoping we'd see 400, 500,000 person increases in the labor force, in the total supply of workers. But you know what? The labor force only rebounded by about 100,000. So we still have a ways to go when it comes to labor supply. Again, the unemployment rate ticked down to 4.6%. That's really good. But the labor supply just rising by 100,000, 104,000, I think is the number of workers. That's for 150 million person labor force. That's nothing, right? That's why the labor force participation rate did not really change. So that is kind of the lay of the land here. I want to take a moment here to stop and see if we have any questions. Again, this is, like I reiterated at the beginning here, this is an experiment. You all are the guinea pigs. This is a lab. We at Appcast, again, want to introduce myself. My name's Andrew Flowers. I'm a labor economist here at Appcast. We are a global leader in programmatic recruiting advertising technology. So I hope to every month join you all here at LinkedIn Live and kind of walk through this monthly jobs report, but not just focus on the numbers. That's important, of course, right? But to take a step back and think about what does this mean for hiring trends? What does this mean for talent acquisition? The entire landscape. How do we navigate this extremely unique labor market that is recovering from a global pandemic that is challenged by supply chain constraints, rising inflation, competitive wage increases? We see record high quits rates. You probably heard of the so-called Great Resignation. And that's really the way I think about it, a shift in worker expectations, a shift in how workers perceive what their jobs mean to them. And we saw really high quits rates this summer, particularly in leisure and hospitality and restaurant and other kind of COVID facing jobs. So these are all topics that I'd love to take your questions on. And again, I'm still navigating this technology here. I apologize if it's a little janky right now. We are again running a lab experiment, and in the months ahead, we hope to give you a tip off, a kind of a preview of doing this for the monthly jobs report. So if I don't see your questions, I apologize. I'll hopefully have someone feed those questions to me. And I just want to recap my main points here. For those who were just joining us, my main points on the October employment report are strong hiring demand. We saw payrolls increase by 531,000 net new jobs. We saw it broad-based, right? I'm going to just recap some of the industry numbers. Restaurants up 119,000, manufacturing up 60,000, warehousing 54,000. By the way, warehousing and storage jobs, that's the one industry that's not just above its pre-pandemic level, but soaring above it. And when you look at the specific sub-industries within there that are booming, couriers and messengers, right? This is like Uber Eats, DoorDash, different GoPuff, different food and courier services. Couriers and messengers, that subsector of warehousing and transportation, that's up 20%, right? Because there's been a kind of tectonic shift in the economy and in the labor force towards not just e-commerce, right? Amazon is booming. That they're a big part of the reason why warehousing employment is soaring. But it's not just Amazon and e-commerce, right? It's also just delivery services, and 20% growth from the pre-pandemic levels in couriers and messengers. That's astonishing. So again, back to what I was saying earlier, construction up 44,000, healthcare up 37,000, retail up 35,000. What does all this mean? So the 2 points I mentioned earlier, I just want to regurgitate those. One, it means that hiring is broad-based, right? This is not just a rebound from the Delta variant cases that have declined in recent weeks and recent months. This is just an overall economy running red hot. We have really strong household balance sheets. People's personal savings are at relatively high levels. They're spending money, mostly on goods, on stuff, cars, appliances, home repairs. But they're also spending, especially as Delta declines, they're spending more on services, restaurants, haircuts, movie theater tickets. And that strong household balance sheet numbers that we see, the strong business investment we see, is all driving tremendous growth in the economy. That's why these hiring numbers we see across all the industries are so strong. So that's the first point. We know that hiring is broad-based. But the second point, when you look at retail, when you look at leisure and hospitality or restaurant jobs, any COVID-sensitive jobs, we see a strong bounce back. And leisure and hospitality grew over 160,000 in October. That's a great sign. I mentioned retail. That was up 35,000 in October. Great sign. So the Delta effect is fading, thankfully. So that was the second point I really wanted to mention. Broad-based gains, the economy is running hot. The Delta effect is fading. Those are both good signs, right? But the third point, the kind of, not to pour cold water, but for recruiters, for talent acquisition professionals and others, there's a lot of focus on worker supply, right? Because there are labor shortages in a number of industries. The number of job openings is at a record high. When is the labor supply going to really rebound? And it hasn't yet. October, at least the October employment report showed us that it hasn't really rebounded. The labor force, which is in the 150 plus million range, I hope to see a 500,000 increase in the labor force, right? The folks who either have a job or are looking for a job. Well, it only grew by 100,000, 104,000 is the number it grew by in October. So that's not a lot. And so the labor force participation rate, the share of the population that's actually in the labor force, right, participating either that has a job or looking for a job, it did not change. It's at 61.6%. It's just flat. So labor supply has not fully rebounded. I did mention that the prime age employment to population ratio, which is that 25 to 50-year-old subset, they tend to be in their prime working age years. That's much higher at 78%. It grew a bit in October, so that's a good sign. But again, there are around 6 million people who who want a job and are actively looking, who want a job but are not actively looking, and so therefore they're not counted in the labor force. That's still 6 million, and that number held steady, right? We wanted to see those folks shift over, and so this is where it's almost counterintuitive. Sometimes when the unemployment rate declines, it's a bad sign, right? Because the denominator for the unemployment rate, if the labor force stays small, if folks aren't even looking for work, that's not a good sign. If that's why the unemployment rate declined. And ironically, sometimes when the unemployment rate increases, it's because more people are joining the labor force. They're deciding, you know what, I wasn't looking for a job, but now I want to look for a job. And so they're counted in that denominator. And so the unemployment rate increases, but for a good reason, right? And so that's where it's kind of counterintuitive. I was hoping to see that in October. I was hoping to see a rebound in labor supply, but we have not seen that, unfortunately, not yet. So what does this mean? Let me kind of wrap up here. What this means is recruiting, the talent acquisition landscape in terms of trying to find workers that fit your company's needs. It's been very challenging in 2021. And it doesn't seem from the October employment report that it's going to get any easier in the near term, because we were hoping to see those indications of labor supply really rebounding. Hasn't happened yet. And so that's something to watch in the months ahead. I'm going to be paying close attention, not just to the hiring demand side of the economy, right? That's coming from the employment report. It's coming from job openings numbers. It's coming from corporate earnings. I'm paying attention to that demand side, yes, but I'm even more concerned about the supply side, because with rising wages, accelerating inflation, and labor shortages in some industries, all eyes are on the pool of workers, those 6 million folks who want a job but aren't looking. And we still have to make up the lost ground in the labor market. We're still 4.2 million jobs below where we were pre-COVID. So the economy is running quite strong right now. Some would argue it's running too strong because inflation is rising, is accelerating, but it needs to run strong because we have that ground to make up. We have the 4.2 million jobs we have to get to be where we were pre-COVID. And we have even more than that, like maybe 6-7 million jobs, 8 million jobs to be back on trend of where we were pre-COVID. So again, apologies if I'm missing your questions here. I want to just reiterate, this is Andrew Flowers, a labor economist at Appcast. I hope to join LinkedIn Live on the first Friday of every month to do a chat like this, to go live, to just talk about the Bureau of Labor Statistics monthly employment report, but to talk about what it means for recruiting, for TA leaders, for HR leaders. So if you have any questions, please drop them in. If I'm missing those questions, I apologize. Again, you all are the guinea pigs of this lab experiment. And on that note, I just want to reiterate, my email is andrew.flowers@appcast.io. Let's connect on LinkedIn. You can email me. You can drop me a question here in the live stream. But the goal here today was just to have an informal conversation. And I really appreciate you all if you joined. And if we didn't catch your question, I apologize. And join us again next month. This was a real fun experiment, and take care. All right. Bye now.